What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys a state of the market and upcoming earnings and events that could potentially pivot the market. If that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well. As we all know that the market can change on a dime, and daily updates are important. So let's get right into it. There's a lot of important stuff to unpack. If you haven't been following me to this point, I've had a thesis essentially come into a lot of this stuff, and I share that almost on a daily and weekly um, time frame. So, what are we looking at? What happened this past week? Well, this past week we had the ECB, which was an important event. They came in at a 75-point basis move, directly following a 50-point basis move as they hit a new high in inflation, 10%. I believe it was just over 10%. But nonetheless, Europe is in a really bad position. They had an emergency meeting on Friday in Brussels. They're trying to determine what they can do as far as gas is going on. Gas has really been the issue here overall. Now, people can say it's not gas, and the issues that the supply strain issues that we've had over the pandemic, and then getting the Russia-Ukraine war, and then Russia shutting off pipelines. It's causing a lot of issues because everything essentially runs on uh, gas, right? On oil. And the oil, not to mention just that, but oil is in a lot of different things that you use in your everyday life. So just be mindful of that. So the fact that oil has been skyrocketing has not helped out the situation. Now it has pulled back some, but the question is it going to continue to come down? We are getting ready to go into the winter months, and that is what people are concerned about. That is why there was an emergency meeting on Friday to see if they can cap it. But Russia has also said that if they attempt to do that, that Russia is going to take more action. So the U.S. can ignore so long, and then that will have an effect on our economy. Now, being said, uh, last week we did have Powell. Powell, again, very hawkish. Most Fed members have been extremely hawkish and been advertising a 75-point basis move. This is the problem: is the market is becoming normalized to a 75-point basis move. Like that's okay. It is not. You have to understand that if they continue to keep running 75-point basis moves, we had the interest rates for housing loans, home loans, has actually reached a peak since 2008. Just to put things in perspective, things are not good. And we have become numb because of the pandemic. We've become numb because of these, what seems to be normal rate raises. But it was historical to have two 75-point basis moves back to back. Now you're going to potentially have three, and what kind of what kind of impact is that going to have on the economy moving forward? Higher interest rates. People, you're starting to see the housing industry dial back and slow down a lot. You have to realize again that people have created the spending habit over the past 2 years of getting free money and seeing credits go up sky high. You've also seen there was a report that came out this past week as well that essentially um, people's that credit rates ratings or credits card debt is going through the roof, or savings is extremely low. There was another report that came out that essentially the wealth has fallen a couple $1 billion over the past I think it was past month or so. But with that being said, I mean, the things are not great at all in what's currently going on. And again, we've become numb because we've been living in this state. You have to realize that with these rapid increases in rates, the last time, again, the EU or the ECB raised rates at such a fast pace, we had a market crash. And right now, we're piling into a potential bigger crash with multiple black swans that are building up right now with the energy crisis and with home loans and mortgages in the housing industry, and people potentially a lot of people coming in with bankruptcies, and realizing that people have been buying things that are way outside their budget. And after about a month or so, this report, there was another report that came out like 2 months or so ago that people getting these luxurious homes, luxurious cars, and then finding out a month later they can't afford it and getting rid of it. And we're seeing a lot of this. This is trending and been trending over this year. Again, you have those spending habits, and people can't afford these things. And this is what's happening. Things are starting to unfold. Now, we have to also understand that something I always say is the stock market is not the economy. The stock market runs off of headline news. It doesn't mean what I talk about is the things that are playing on in the background that the headline news has not caught up to yet. Understand that these theses that I build are essentially behind the headline news. That there's going to be an event that's going to happen, that it's going to drop, like it's magically comes out of left field, when in fact it's something we knew about the whole time. It's not something you're going to see directly, but it's something you have to be mindful of and paying attention to specific things to be able to see it. But that being said, what matters this week? What matters going forward? A big thing this week is core inflation. We want to know where core inflation is. Again, the ECB they just hit new highs in inflation. Again, that's not saying it's us, but it's still going to have some sort of impact on us. What is our saving grace is, I think, the fact that our circulation of money continues to remain strong as long as Ukraine and Russia are in war, because we're offering them billions of dollars, and in turn, they're buying billions of dollars worth of supplies from us, and that's keeping us afloat. Or else, I think we would see things a lot worse than what they typically are. Everybody's getting back to school. You haven't seen that shock on supply yet. It is still way too early. It just started. You're not going to see this until next month. You're going to start seeing this shock of demand on oil on our side. So that's something to keep in mind. These are things you have to pay attention to, because, again, they're not going to be blatantly obvious unless you've been, I think, in the markets for a while and understand really what's going on. So with that being said, you have core inflation. Yes, it could come down potentially. Right, school has just got it started across the nation. You're not going to see that impact on this report. You'll see it potentially next report. This is what they call lagging indicators of what's really going on. And so, core inflation. There's a couple of things that could happen here. I am not opposed to the market running. To be honest, if we come in below that 8.5, I think the market will rally pretty heavily. Now, depending on how big that drop is from 8.5, if we drop down to a 7.5 or potentially even 6, which I think could potentially happen, just because, again, there hasn't been any school or any demand on oil. So you have to understand the impact of oil and how much it actually is in everything that you touch, every product that you use. It's not just for your car, but understand that right, to run essentially all these farms that are growing your food and everything, right, that it costs a lot of money when you have gas prices that are so high. Yes, it's come down, but it's extremely high. And so, again, this particular report, I can see us dialing back. and realize that there will be a rally off of that. But that's not saying you're coming into one of the months that October is a month that is also well known for a pullback. There's been some really dark times in October, put it that way. So this is kind of leading up to the next report, not so much just report, but the next report. And I think the Fed realized that because they've been very strongly putting forth the fact that they're doing a 75-point basis move, because they know that once this whole seasonal thing changes, that next report is going to be bad. That's the report they're aiming for, they're shooting for, and trying to capture on their next monetary policy, not what is currently going on. You have to understand a lot of stuff is delayed. There's a lot of seasonal things that are delayed. You are going into the winter months. School has just started. There's a lot of things that are coming into play here. And so, again, I think we could get some sort of rally. Technical wise, we look like we're getting ready to dump. But again, Tuesday is going to have a lot of weight. Now, there's going to be a lot of data this week. That's fine. That's great. I really don't care. What I care about is the core inflation on Tuesday. And that comes out at 8:30 a.m. Eastern Standard Time. And then next week, we have the FOMC monetary policy. So we'll understand whatever rate raises we do get is going to be then. Things are already bad and things are already getting heavily hit. Now, the next thing to focus on is the fact that the Fed is talking about a 4%. They want us down to 4% for about a year. And to be able to do that, they need to raise our rates. They were talking about trying to raise rates up to, what was it? I think it was roughly around a 4.5, I believe it was. We're currently sitting like at 2.5. So we could still squeeze in 72, 75-point basis moves before the end of the year. I think what they're trying to do is front run this thing into the winter months where they know oil is going to be, that the demand is going to raise more going into the winter. So being said, this would be the one drop we're going to get, I think, before we get the next big pump in inflation. But we won't know for sure. Again, you're not going to know. Just because it dips 2 reports, I keep reiterating this, just because it dips 2 reports doesn't mean it's going to be that's the end of everything. You're not going to know until time passes, and then you'll notice. You can assume, and if you have risk management in place, that's great, and you can take advantage of these pumps. That's what you should be doing. That's what I do, and that's what I think you should be doing. Unless you're looking at a 5 to 10 year horizon, then you're just dollar cost averaging around this time. That's not saying that there are black swans and we can go a lot lower. I believe we could go a lot lower if some of these black swan events play out. If the energy crisis plays out with what's going on with Europe, that's a very extremely important event that's going on. And then you also have the banking system and the housing sector and what's going on with that. And just kind of trying to be mindful of what's going on there. So watch list, again, I'm just keeping the basics on here. This is not going to change until the market changes. You have to understand the market has cycles. And right now, this cycle, you don't want to be hopping all over the place. This cycle, you want to be very specific, or if there's a specific stock that you like, you should be watching that stock. I don't believe you should be all over the place chasing momentum. I think that's one of the worst things you can do. Because you want to be very specific when looking at dealing with this sort of market. So that's pretty much what we got for there. I think I've pretty much gone over everything sediment-wise, but market in general. This is what's interesting. And we had a nice pump. This is what you have to understand. This is only recovered, about almost 50%. If we use a 50 Fibonacci level here, if I could find the Fibonacci here, it's only been roughly almost a 50% move back from the drop. Now, you can take a 50% move from here. That's fine and great, but you've had some massive drops. You got to keep in mind you have some massive drops and rallies. This bear market rally is what these are. So you just have to be mindful of that. That core CPI is going to matter. I think if it is good are lower than 8.5, I think we could potentially rally up to the 4,300. And that would put us right back at that trend line, is what I'm looking at for the daily. Now, that's if we just come at or below 8.5. Again, if it's uh, some ridiculously good number, then you're going to all-time highs, right? Because I think at that point you provide so much hopium, which the market has been in dire need for, that it could potentially really run at that point. So that's where we're at when we're looking at this kind of going into Tuesday. My concern is we've been pumping here. If you look on the weekly, you're right into support. First break, retest. If you follow me at all, any first retest is going to get a very hard rejection. That's on the weekly. And look at on the monthly. Look at, we had another break back down. We've been flirting with this line all year, this 4,100 mark. Break, retest. We're going to see if we're going to drop here. Again, we haven't seen 36 in a while. Again, I think you're going to need a pretty big catalyst to be able to break this. Again, there's a lot of black swans floating around that could potentially break us below this. I'm not saying we could or it's going to happen this year. To be honest, if inflation isn't any better, I can see us just chopping in this area for the remainder of the year. And then until we get that black swan event that would potentially send us down here. And then we could pivot. Because ultimately, I do believe there's going to be one final leg, whatever this black swan is, one of these events to play out that's going to send us potentially down here. But again, that's just a hunch. It's my feeling from being in the market. I feel like we have one more strong leg down. Technical wise, we look like we're going to get rejected in the short term. What could potentially happen, like I said, if inflation really depends on inflation, right? This all depends on inflation. I think, again, if it is good, again, we could revisit this trend line until the following week where we have monetary policy. If it comes back at 75-point basis move, we're going to drop again back down here to roughly around this 3,800 for that 75-point basis move. And then we'll sit here roughly around and we could potentially ride back up and then drop back down going into the next earnings cycle. And then maybe by that time we will get the black swan event that we've been talking about. And another one that we can't forget either is we have China and Taiwan. That's another black swan event that could potentially play out. And then you're introducing more supply chain. Again, wars don't do anything to the market, right? They're not going to make it. They're not going to shift the market one way or another. Yeah, you might get some initial movement, but you have to understand that it's the supply. If anything happens to supply, that's going to make an impact on the market. That's what it's about. So you have a couple black swans there that could again play out. We have to see. So we'll have to see again. I think if it's a positive core, again, I think we're going to just revisit this trend line. Potentially 4,300 is where we could be looking. Again, if it's bad, again, if it is over 9.1 or back up over 8.5, I think we could drop a little bit, at least down to the 38. If it's over 9.1, I think we're going to receive 36. Because now you're going to put the Fed in a position where they're going to go 100-point basis move. And then that could potentially introduce a lot of panic at that point. Because then people are going to be like, oh, my God, where's inflation going at this point? So, again, I don't really, to be honest, my honest opinion, I don't really think it's going to pop that high. I think it's going to come down maybe a little bit more. I think it could potentially just come down a little bit more just because we are in that seasonal mode. But again, I think the next core CPI is going. Next month's core CPI for September is going to be most important, because now you're starting to roll in to the winter months. Everybody's coming back to school again. That's going to really show you what's really going on. Q3 earnings and stuff are going to really show you what's going on. Those are the numbers to watch, not random data that's being pushed out, that's being fudged all the time, because you don't get true numbers there. So being said, that's what I'm kind of watching, right? This is why I keep my watch list very small, because you don't really know for sure. We are 100% in the middle of the Fed fighting inflation. There's nothing else, no other data, no other anything other. I mean, yeah, you have some other catalysts that could sell us off more, but this is a pure battle between the Fed and inflation. And the Fed continuously say they'll do whatever it takes, and you haven't felt the pain yet. Just saying, again, I don't want to sway you to one way or another, but you just have to make sure that your risk management is in check, and on these pumps you are taking profits unless you are looking further out. So being said, that's what I got for SPX. So it's been an interesting week, very pivotal there. Bitcoin did get a bit of a pump coming into this weekend. Again, we're going to have to see. Could be a retest up here, roughly that 22. We want to see, again, everything is just the pump on the general index. It looks like it's right into resistance after a break. So that could be what we're seeing here, and then could potentially sell off down below the 18K mark is what could happen. Technical wise, that's look like what is going to happen. Again, that report is going to have a lot of weight and it's going to be very pivotal. So looking at Tesla, I did get a break here. It is holding this 268 extremely well. It is a higher or a lower low here, so that's something to keep in mind. If the market does decide to sell off here, that would also be a higher low. So be looking for a lower low, potentially the 225 be the next level we are watching on Tesla if the market decides to start selling off. If things look good, maybe we start selling off into Tuesday. And for whatever reason, core does come down, this thing could go flying, revisit 311, and see if it can break that. Again, this is the first attempt at trying to break that. But one thing to keep in mind, if Tesla gets to 311 and stalls here, that's a bad sign that this thing is going to just come back down. It's not going to make this 311 until we get other news. So just be mindful of that. And again, Tesla stock split, so you have to really be mindful of that. We're trying to really determine and feel out Tesla after the split and see what it's been doing and how well it's going to move. And typically it won't have massive rallies until it starts getting in earnings mode, which is again around the corner. But we need to get through core, and we need to get through the monetary policy to really see where we land at that point, and then make a move from there. Again, BA, your value stock, retest after the break. It's setting up just like the general index. That is technical wise, it looks like it's getting ready to roll over and start selling pretty heavy. I mean, again, it's all lined up perfectly for the core going in this week. Now let's see. Let's look at the banks here. JPM, nice little pump here. Again, the market is going, because this is what we're seeing. This is why I talk about banks all the time. Banks hold a lot of weight in the general index, and so you have to understand that because Powell was talking about, because he actually came out on Thursday, because he's talking about how bad the economy is. That's more apt for the market to rally, because this leads people to think that because of the fact that the market is so bad, that the Fed will not raise rates. And if they don't raise rates, that allows tech and banks and everything else to fly off the shelf and push up, because that means rates will come down. is what is being anticipated there. You have to understand it's being anticipated. These algorithms are reading headline news, and if things are bad, that it's anticipating that the rates will come down, even though the Fed futures are not pointing that way. They're pointing strictly at a 75-point basis move. The Fed futures have been pretty accurate up to this point, so we'll have to see. But that's pretty much what I got for this week. Again, there was a lot of state of the market. There's a lot of different things, thesis. This is something, if you've made it this far, I appreciate you. You have to build your own thesis. It doesn't have to match mine. I respect your thesis as much as I hope you would respect mine. So with that being said, there's things you're not going to catch on data points because data is fudged. You have to pay attention to the actions which are being taken by the Fed, what's going on, what you see in real life. Yes, again, seasonal things do play a huge part in what's going on. And you got to keep in mind there's a lot of moving pieces here. It's not easy to keep track of. But when you have a thesis and when things are starting to play out to your thesis, that's allowed me to solidify a lot more and have a lot more confidence in my thesis into this year and what's been going on about we are getting ready for a huge move, I believe, to the downside. Again, this is not financial advice, but I don't know when that's going to happen. That's the thing, is that I can't time my thesis. This is why I use both technicals and I use both events, because I have a thesis that's based off of technicals and what I'm seeing. Our thesis is based off events and what I'm seeing, and then technical wise, watching it. And majority of the time, it plays out with the technicals. But you have to also understand that events do change things a lot. And they change the dynamic of the market. And this is why I do daily updates and why it's important. So with that being said, that's pretty much what I got for this week. Again, Tuesday is going to be huge. It's going to dictate the rest of the week. And then I think if we do get some sort of pump and rally, I believe potentially at the end of the week or next Monday, we'll get some sort of selling in anticipation for the Fed monetary policy. So just be mindful of that. Again, I know it's a very confusing time, but you're going to get rallies and it's not going to make sense. But you have to understand the market just isn't going to sell, just like it's not going to pump. You have to be mindful of that. There are going to be rallies. We're coming into a earnings cycle at the end of the month. So you have to be mindful of that. It's not saying the market's going to start rallying right now unless that core is way lower. But aside from that, we wait and we see, and then we take it from there. So manage risk, and I'll see you guys later.